Welcome back to Monday Trading, everyone. Today we're going to be looking at the risk profile and how you can use some of those parameters to analyze the risk on your particular strategy before implementing it. To get started, we'll click on the Add Simulated Trades, and then of course we want to search for the stock that we want to analyze or strategize on. In this case, we have Bank of America. You go down to the option chain. We're going to click on the January 20th, 2023 option chain, and we'll go ahead and just stick with the $35 strike. Click on that. It basically adds our strategy under the positions and simulated trades subsection. We click on the risk profile and it takes you to this visual representation of your strategy and looking at how certain parameters of the analysis tool would affect your particular strategy. So on the y-axis, you're going to have your profit and losses. On the x-axis, you're going to have the stock price. And you will have this lightly shaded area, which pertains to the future expected price range based on the calendar date that you have selected here. We'll take this back to today. Based on the calendar date that you have at the bottom here and the probability date you have at the very top. So the probability date refers to the option expiration date or the date at which you would want to exit this strategy, because sometimes you might not want to hold a particular option into expiration. So the purple line refers to the theoretical profit and losses you would look at for this option based on this particular date that you input here. The blue line refers to your profit and losses at expiration for this particular strategy. You then have price slices, which are price points that you use to analyze your strategy against. So in this case, you have 10% above the current price in the middle, and you have 10% below the current price, which is essentially these three lines that you will see on your option pricing model. Now, if you wanted to see how time would affect your strategy, you would have to adjust this particular calendar date. If at all the price of Bank of America remains the same, we're going to click on this little gear icon to for us to have an additional parameter that we can adjust to look at some of the visual changes on the graph. If at all Bank of America remains the same price by 30th of September, we're going to see that we're looking at this much of a loss because of time decay. Now, if you click on this profit and loss number, it shows you the breakdown of what's going on. So you had 10 contracts at an average price of $1.87. Now, with the time decay, it basically now shows that the contracts are worth $1.75, considering that the price of Bank of America remains the same into the end of the month. And this would be the loss that you'll be looking at for your particular strategy. So that's one good thing about using this tool. It allows you to play around with the dates, play around with the numbers, and see how your profits and losses would be affected. Now, let's say we change the price by October 4th. Let's say Bank of America jumps to about $35, okay? You hit enter. You will see the profit losses change as well. When you click on that, it shows you the breakdown. You bought them at $1.87. Now, if at all Bank of America jumps up about $35 by October 4th, you'd be looking at each contract at $2.63. And of course, this puts you at a profit of about $7.60. Okay. Now, notice that the lightly shaded area as well continually shrinks as you go forward in time. So the closer you get to your expiration date, the smaller range you would have of the expected price. The expected price is essentially based on the calendar date and the probability date up top here. So if I change this out to November 29th, okay, so it defaults to November 30th, this expected range will shrink some more. The main takeaway of this subsection is it allows you to control the date and the price of this stock or the price of this strategy. So you can dictate what price and what date to see how those two parameters would affect your profit and losses. You can also adjust the volatility here and see how your Greeks would move around and see how your profits would move around as well. So that's one good thing. So this gives you interactive data that you can work with to really look at how the numbers would change for your particular strategy without having to open up the position and looking at and realizing those profits or losses with real money. In this case, if you did not want to use this particular way of analyzing a strategy, you can also use the paper trading, which is the platform I'm on right now. But this is basically how you use the risk profile section of this subtab. Thank you again for tuning in. We're going to be looking at the probability analysis in the next video, so tune in. Thank you.